Hello to everyone and welcome to the weekly wrap-up video. Firstly, just going to take a summary of what's happened this week and the key events, and then look ahead to next week and the key events going forward. So firstly then, just to summarise what we've seen this week, and it has been dominated by the US. Two main events really. So firstly, the FOMC. Just to recap then, we saw them announce that they'll be conducting 45 billion worth of treasury buys each month. That added on to the 40 billion of MBS purchases already committed to take purchases up to 85 billion per month. So that's an increase from the programme that we saw under QE2, but less than the 100 billion QE1. Now, it was expected they would increase this by 45 billion, so that was in line. However, a couple of changes. Firstly, they'll be purchasing treasuries from 4 years out to 30. Currently under Operation Twist, that's from 6 years out, so a slight extension to the maturity range they'll be targeting. And also, the main part of that was the fact they've changed their language, so they're now targeting economic thresholds, notably 6.5% unemployment and also 2% or 2.5% inflation target. Now, this is in terms of the rate. They won't be targeting this in terms of QE, but that will be interesting to see if we reach those and what sort of time period. Some have suggested this won't be hit for between 4 and 5 years. Same number of Fed officials do expect us to keep rates exceptionally low through to 2015, so it looks as though there'll be no change to the Fed fund rate. But there was a bit of underperformance in the longer end of the curve. A lot of those buys concentrated more in the 7 to 10 year bracket. There is still quite a lot being concentrated in the 10 to 30, but not as much as expected. Therefore, we did see a bit of a sell-off in terms of the longer dated treasuries. Now, apart from the FOMC, we've also had lots of fiscal cliff discussions this week. Congress, they're due to adjourn at the end of today, and Congress will be beginning again on the 3rd of January. Boehner notably going back to Ohio this evening, so no more talks with Obama. However, not too much of a big deal. Looks as though talks will just be held outside of Congress, outside of the House and Senate, more likely in the White House or other locations in Washington. So that'll be key going forward. Be interesting to see tonight whether we see anything out of Boehner, but next week it'll definitely be key, considering those automatic tax hikes and spending cuts come into effect on the 31st of December, so not much time left. But in terms of the main events this week, that's been it really. We have had the Greek buyback as well. That was relatively smooth. They did extend the deadline, but they met it in the end, so not too much of a market driver. So then looking ahead to next week, the key events going forward. So then looking ahead to next week and the key events, but firstly, worth of note that in terms of fixed income supply, there is no bond issuance from the Eurozone next week. There's just T-bill issuance from Spain and France, so France on Monday, Spain on Tuesday. However, lots of supply from the US Treasury come to the market with 2 5s and 7s on Monday, Tuesday, Wednesday, and then 5-year tips on Thursday as well, so that could weigh on prices for the US next week. But in terms of data points, we do have the third reading of GDP from the US. Now, in terms of the secondary reading, we saw that revised higher to 2.7% from the prelim reading of 2.0. That was mainly due to accumulation in inventories, unlikely to be represented in the third reading next week, but that could be quite interesting going ahead. And apart from that, we've got Japanese general elections on Sunday, so that's likely to see the opposition leader Abe gain power, gain majority with his LDP party. He is pro-aggressive monetary easing, so heading into this we have seen some pricing in the end, some weakening, although a bit of volatility today. We also have the Bank of Japan next week as well, so they'll be the key events, but all this overshadowed by fiscal cliff decisions as we head into the year end. Those automatic tax hikes and rate or spending cuts are going to be implemented on the 31st of December, so not much time left for those talks to take place. But in the meantime, that's enough from me. Hope you have a great evening and a brilliant weekend, and I'll catch you next week.